Hi everyone, you spoke, I listened, and I'm wearing this kind of funky microphone which hopefully will improve the sound quality of these things. Now I've got to keep my hands steady. So on Sunday we were saying we didn't like the market this week and we liked oil, which obviously is a pretty levered bet. That's to say the more oil goes up, the likelihood the more the market worries, especially as we go into the inflation print tomorrow. Yesterday the market bounced after 5 days of sell-off, but actually today again we're weak. And we've got the major T-bill auction starting as of just about right now, which could easily pressure the market more, so we'll see what happens. My market maker friend today thought there would be more downside from the weak start that we saw, so we'll see what happens throughout today. Yesterday Aramco reported results, which obviously through the Kingdom of Saudi Arabia is an important part of why oil's been going up. They actually had good realizations in Q2 on 13 million barrels a day of oil equivalent. They did about $78 a barrel oil equivalent, which is above Brent, and now of course we're effectively $10 higher. So the Saudi tactic is kind of working insofar as they've cut production by about 10% and they've got about a 15% increase in the oil price. The question is that going to last through the end of summer? I mean, I think it'll last through the end of summer. The question is what happens once summer is over, especially if the refineries start running better, because we think that the strength in refining margins, which ostensibly is a signal of good demand, it has to be a signal of somewhat good demand, but we think it's been exaggerated by major outages that we've seen as a result of heat in Texas, and most recently BP's Whiting refinery has gone down again, which at a time when we were watching carefully because Mid-Con refining was under a lot of pressure, the fire and advanced turnaround that we're seeing with BP's huge Whiting refinery in the Mid-Con has actually sent margins back up again. So refining looks strong, which ostensibly would mean strong demand, and Aramco were talking about strong demand. They see another 1 million barrels a day of demand from jet fuel alone if we resume pre-COVID levels of activity, which doesn't really add up because actually airlines are pretty much back at pre-COVID levels, but are more efficient, and we put a note out to you a couple of weeks ago highlighting that. But broadly speaking, Aramco is very bullish on second half demand, but also what we've done today is highlight how weak petrochemicals are, and that's similar to refining in many ways for an opposite effect, which is to say there's been huge capacity additions globally in petrochemicals, including the US, and when you combine that with somewhat weak demand, we've got a real recession here in petchems, which we think is a very bad sign and is keeping us, once we get through Labor Day, pretty bearish on the outlook for the second half. We'll see. Saudi clearly wants to maintain the price in this $85 range and probably higher. I think 85 is seen as the Saudi budget break even, and 95 is their aspirational price that they've talked about previously for their expansion spending. So we'll see if they can hold the market up here, and it'll just be interesting to see what happens, allowing for hurricanes, which we're entering a mega season right now, how better performance potentially at US refining will affect US refining margins, particularly given the ongoing weakness in Europe, which is very visible in the note that we sent you today about petchems and Aramco's commentary on the petchem recession. And of course, with some weakness in Asia, with stories of much higher throughputs in China, you should in theory squeeze the crude market higher here as long as demand remains good for summer, and that of course would then in theory also begin to pressure margins as you run refineries harder. So we'll see. At the moment the refinery is not running that well, which is quite bullish for oil insofar as crude prices have got to 85 without refineries in the US really running that well. And so I think the general call that we made on Sunday, which is that we're bullish oil through Labor Day and bearish the market, holds pretty hard. I'll leave it there. Hope you have a great day. Hope you can hear me. What with the helicopters, the succession helicopters arriving behind me. Thanks.